Perfect. So, without any delay, let's begin discussion of the next topic, that is completion and review chapter. In CA Inter, we have a chapter called completion and review. Let's revise that chapter. This chapter consists of totally 6 standards. By the way, I actually scheduled this particular topic for live at 11 o'clock, but I postponed it to 12:15 now because I have to go to a hospital. Nothing serious. Tomorrow morning, my wife's, we are expecting second baby tomorrow morning. So for that, some formalities will be are there in the hospital to do some checkup, basic checkup, all that. So tomorrow morning, 6 to 7 around the time, the surgery is going to happen, and we are expecting second baby tomorrow morning. Fine. Tomorrow evening I'll tell you. I'll post it on YouTube. What exactly? I mean, baby boy or baby girl. I'm not sure. I wish to be a girl child. I wish it should be a girl because I already have one son, 2 years old son I have. So that's it. Imagine, in spite of this precious moments, we are taking live class at this moment. It's okay. It is something that I promised long ago. Fine. So let's proceed discussion of this chapter, completion and review. You know, in this chapter, we totally have 6 standards. We have 6 standards totally. 260, 265, 450, 560, 570, 580. These are the 6 standards that are there in this chapter. Whereas 570, I have already covered it as part of audit report topic. If you see audit report related revision class, okay, which I already covered in part 1 audit marathon, which is of 7 hours video, for example. So inside that, 570 is already covered. So now we are left with only remaining 5 standards. Fatafat, within 60 minutes, within 1 hour, I will finish all these topics. Trust me guys, you will get a clarity like never before. On these 5 standards, I will give you amazing clarity. Tomorrow, whatever the question going to come in this chapter, right now in this 1 hour itself, I'm going to tell you what kind of questions will come. Definitely from the list of questions which I'm going to tell you right now, from this list only you will find that. Okay, fine. Now, 450. First, let's begin the chapter with the essay 450. You know, evaluation of misstatements identified in an audit. Evaluation of misstatements identified in an audit. That is a standard heading. Evaluation of misstatements. You know, in this 450 standard, there are 4 topics which are predominant. What is meaning? First one that you need to understand is what is an uncorrected misstatement. The meaning you need to understand. Then we need to understand the concept of accumulation of misstatements. Then we need to understand communication of misstatements to the management and to those charged with governance, and documentation of the misstatements. 4 issues are covered. Now let's decode one by one. 450. What is the standard talking about? Evaluation of misstatements identified during the audit. Like whatever, once you completed the audit, when you're doing the audit, you definitely come across certain misstatements. Like you will be identifying some misstatements. So how to evaluate them? You know, in this, we need to understand a term called uncorrected misstatements. You know, the word misstatement is used at so many places. Risk of material misstatement, uncorrected misstatement, undetected misstatement, projected misstatement, tolerable misstatement, expected misstatement, anomalous misstatement, non-anomalous misstatement, so many. So many ways the word misstatement is used. Here one term, that is uncorrected misstatement. Uncorrected means what? You know, we identified a mistake in audit. We identified it. We detected it. It's a real mistake. And it is not yet rectified in the financial statements. That's it. That's called uncorrected misstatements. Uncorrected misstatements refers to misstatements that auditor has accumulated during the audit which have not been corrected yet. So the misstatements which are accumulated but not corrected. So before forming an opinion, auditor has to identify, evaluate effect of identified misstatement, effect of uncorrected. You see, identified misstatements, uncorrected. Identified misstatement is 2 types. Uncorrected, corrected. Some misstatements, management will correct immediately. Some mistakes they will not correct it. Those mistakes which management have not corrected, what is its impact on the financial statements? That is most important while forming an opinion on the financial statements. Now, see, that's uncorrected misstatement meaning. Now, first of all, accumulation. What do you mean by accumulation of misstatements? See, whenever we are doing audit, whenever we find any mistake, we should accumulate it. Now, here there are 3 levels of materiality. There are 3 levels of materiality in accumulation of misstatements. You know, there is something called performance materiality, overall materiality, triviality level materiality. Any mistakes less than triviality level, we will ignore directly. Any mistake above trivial level, whatever mistakes are there, we will gather, we will accumulate. If the accumulated misstatements total is reaching performance materiality level or is crossing performance materiality level, then we conclude that financial statements are materially misstated, and where we express a modified opinion. If at all they are crossing performance materiality level itself, we will conclude that accumulated misstatements, if at all they are reaching performance materiality level itself, we assume that we conclude that the financial statements as a whole are not free from material misstatements. Accordingly, we will give modified opinion. Here in sampling, no, tolerable misstatement, overall materiality, performance materiality, like that, some definitely some points and all came, some link and all is there. Right now that is not relevant. This point alone you remember. So any misstatements which is above triviality level, that alone we accumulate. Mistakes which are more than trivial in nature, only those mistakes we will accumulate. Look at the auditor shall accumulate. Accumulate means what? Gather whatever mistakes your team members are identifying, tell them that beyond this level, beyond the trivial level, please accumulate it. So accumulate mistake, the auditor shall accumulate misstatements identified except those that are clearly trivial. Suppose if a mistake is trivial in nature, less than trivial in nature, don't accumulate. Any mistake which is above trivial in nature, accumulate. In the recent CA final, an MCQ question has been asked on this. In CA final also we have 450 standard. In CA final, MCQ was asked on this May 25 exams. Now, what are various examples of misstatements? Very simple: omission of transactions, wrong capitalization of machinery repair expenditure, overvaluation of stock, undervaluation of stock. Simple. There are so many ways a misstatements can happen. Now, you know what? Whenever we identify mistake, generally what happens, we will first interpret what mistake is it. Is this mistake repetitive in nature or non-repetitive in nature? We evaluate the mistake nature. Is it due to fraud or is it due to error? We will identify. According to the type of misstatements, after we evaluate the nature of the mistake, sometimes what will happen, we will change our audit strategy. We will change our audit plan. The auditor shall determine whether overall strategy plan needs any revision. So whether audit strategy plan, does it require revision because of the nature of identified misstatements and circumstances of their occurrence? And further, auditor will change the strategy and plan if aggregate misstatements accumulated approach materiality. Just now I told which materiality? Performance materiality. If the total of accumulated misstatements are reaching performance materiality level, if the total is reaching performance materiality level, we generally change our audit strategy, audit plan. We will try to cover more samples and try to interpret the results once again. Then the auditor, whenever auditor identified mistakes, whenever the auditor identified mistake, we generally tell the management, dear management, I found so and so mistake, which are trivial, which are beyond trivial in nature. They are not trivial, they are very bigger than trivial in nature. So we tell the management, we request them to review. We will request management to review all the transactions and balances to understand why this mistake happened, and we will also tell the management, we will request management to perform procedures to identify real mistake, actual mistake in the population. And if management identified and corrected misstatements as per the auditor's request, we will do additional verification to ensure that there are no misstatements remain. That's it. So accumulation. So what is accumulation? First, accumulate the mistakes which are not clearly trivial, like which are beyond trivial, accumulate. If they are trivial and less than trivial, ignore. And mistakes example they gave: revision. If at all, based on the nature of mistake and circumstance in which they occur, or if the aggregate mistakes are approaching materiality, the auditor shall revise the strategy and plan. They will tell you under what circumstances the audit strategy and plan has to be revised. As per SA 450, they will ask you. Under what circumstance audit plan and strategy has to be revised? In light of 450, they'll ask you. Many students will go and write 300 related: revision of strategy and plan, changes in circumstance, changes in conditions, identification of new matter. That answer they'll write and come. That's wrong. That is 300 answer. This is 450 answer. So the auditor shall determine whether change to strategy plan is required in light of nature of the misstatement, circumstance in which they occur, as well as third scenario, if aggregate misstatements accumulated is approaching materiality, then also the auditor will revise the strategy. Okay, you identified mistakes. What you will do in that time? We will request management to review all the transactions balances once again to identify total actual misstatement. And if management identified and corrected, I will once again check whether are there any mistakes that are there. That's it. This is what accumulation. So this question itself straight away can be asked as a 4 marks question. Write about accumulation of misstatements in the audit. That itself can be asked as a straight 4 marks question. Now, okay, you accumulated, you identified. What you need to do? Communicate. Why you need to communicate? So that the mistakes has to be corrected. Yes or no? You found a mistake, tell the management, communicate them and ask them to correct it. So the auditor communicate all the misstatements accumulated to the management, and this communication enables the management to evaluate or disagree if necessary. Management will listen to you, sir, it's a mistake. They will evaluate, is it really a mistake or not mistake? Because auditor might think it's a mistake. From management point of view, this may not be a mistake. So, and auditor, what they will do, they will request management to correct it. Correction helps to maintain proper records. Sir, management is refusing, sir. We are not correcting. I told that there is a mistake. Management is telling, no, sir, inventory valuation is correctly we did. Our NRV calculation is like this only. This is correct NRV calculation. You auditor is doing wrong calculation. So management is disagreeing with the auditor. Understand what is the reason why management is refusing. Take that understanding in evaluating whether financials are free from MMS. So if management is refusing to correct misstatements communicated by the auditor, ask them the reason why they are refusing. Look at the reason which they are giving. In light of audit, what is its impact? Understand. Now, reconfirm, once again confirm whether materiality is still appropriate based on actual financial result prior to evaluating uncorrected. Before you decide about mistakes, all that, once again check whether materiality level and all is correct or not, so that you can proceed whether material misstatements are there or not. You know, if at all uncorrected misstatements are material, determine whether uncorrected misstatements are material, considering size of the mistake, nature of the mistake, and circumstance in which they occurred. So what is the size of the amount? What is the nature, fraud or error? Circumstance when it is occurred, is it here and in between? So effect of prior period uncorrected misstatements. So if at all any misstatements are there in the prior period, what is its impact on the current period? That also take into account. And you must communicate to top management. Generally, when you identify mistake, you communicate to the respective management, like accountant or finance manager. If they are not responding, if they are not agree to change, then you will communicate to top management like audit committee, directors. You know, the auditor shall communicate with those charged with governance uncorrected misstatements and what is their impact, and request correction of uncorrected misstatements. Discuss what is the effect of prior period misstatements on the, if at all any prior period mistakes also there, discuss with top management what is its impact, and get a written representation that uncorrected misstatements are immaterial. Like I communicated with top management, first I communicated with management, they refused, and I asked them what is the reason, all that. Then I felt that their answers are not correct. Then I communicated to top management. Top management rectified some mistakes they didn't rectify. Now when I ask them why are you not rectifying some mistakes, they are telling that they're immaterial, sir. They're immaterial, sir. So we don't have to rectify it. Get a declaration that they believe that it is immaterial. Get a declaration that the uncorrected misstatements are immaterial. That is the reason why top management is not correcting them. Like that, get a declaration. And what is the summary of those misstatements which are not corrected and corrected? A list of mistakes communicated to the management and top management. Corrected how many, uncorrected how many. List of it also, attach it as an annexure to the written representation. So get a representation from the management and top management that uncorrected misstatements are immaterial, and a summary of these uncorrected misstatements shall be included or attached to representation. MCQ might be asked on this. Next. So next, finally, auditor has to document misstatements identified. Like what you need to document? What is the triviality level? What is the triviality level? You fix it. What is the triviality level? That triviality level you document. The audit documentation must include amount below which misstatements are considered clearly trivial. Trivial means what? Negligible. Triviality level means negligible. By remember, immaterial is different, trivial is different. Suppose if a mistake is less than materiality level, then that is immaterial. But that immaterial mistake may be more than trivial level. So remember, many students they may confuse that immaterial and triviality both are same. No, they both are different. Triviality means negligible. If it is less than trivial, it's negligible mistake. If it is more than trivial, it is to be considered, it is to be accumulated. And total mistakes identified we will accumulate and compare it with the materiality. If the total mistake is less than performance materiality, then we assume that the mistakes are immaterial. But remember, they are more than trivial. So be careful. Now, accumulation. So auditor has to document all mistakes accumulated during the audit, and you need to mark whether they're corrected or uncorrected or all that. Suppose if some mistakes are uncorrected, what is your conclusion? Whether uncorrected misstatements are material or management told that they're immaterial. They gave a representation that they're immaterial. But according to you, are they material or immaterial? You should also conclude. And what is the basis for your conclusion? You decided some material or immaterial, right? Some mistakes are uncorrected, right? Uncorrected misstatements total are they material or immaterial? That also you should decide. So documentation. Directly this itself can be asked as a 4 marks question. That's it. SA 450 is done. So documentation of misstatements, communication of misstatements, accumulation of misstatements, and what is the meaning of the misstatement. That's it. 450 is done. Confident? Easy or not? So next, let's proceed discussing 260 standard. 260 standard. You know, in the recent Jan 25 exam, everybody, most of you know that Jan 25 paper was one of the tough paper, correct? Everybody told. So, but the questions asked in Jan 25 paper and all, we predicted in marathon itself. Many students who followed our EVO, whatever the classes or marathon thoroughly and followed the book, they know that question paper is very much predictable. That is not at all a tough paper. But anyhow, you see how the question was asked. SA 260. Now, before I go into SA 260, what are the points? By the way, SA 450, what is the meaning of misstatement, accumulation concept, communication of misstatement, documentation, all the 4 elements we covered. Now 260, we have here four points to discuss in 260. You know how, you know what is actually SA 260? Communication with those charged with governance. Communication with those charged with governance. The standard itself is saying the auditor has to communicate with top management. What to communicate, how to communicate, when to communicate, you know, all that standard is answering. So what the standard impliedly telling, dear auditor, don't do audit blindly without talking to top management. You must talk to top management. You must communicate them some important matters. What are all you must communicate to top management? The standard is explaining. And you know, the standard talks about what is the benefit of two-way communication. The auditor and the top management of the company, they must have a proper two-way communication. And who are top management? Top management means those charged with the governance. Who are they? This is what they have asked in Jan 2025 exam. Who are those charged with governance? This is what they ask. And what matters to be communicated and how to communicate, communication process, especially independence related communication in case of listed company. So each of it we will discuss now. Now let's first discuss, you know, who are those charged with governance. This is what Jan 25 exam they have asked. Jan 25 attempt. Again, don't immediately say, sir, in Jan they asked, na, May attempt they won't ask this. Come on, don't be foolish like that. Okay, paper setters will not do set like that. They may test this, who knows? So who are those charged with governance? They're very simple. Top management is either a person or an organization who oversees strategic direction, who have accountability, and who are responsible for financial reporting. They are responsible for directing the company. They are only accountable for the company. They are responsible even for financial reporting. A person who has all these responsibilities, we call them as those charged with governance. In Companies Act, they are nothing but key managerial persons. And in some entities, top management may include management also. Those charged with governance, sometimes they also involve in management of affairs of the company. Depending on governance structure, some entities, no, they have a supervisory board. Okay, in some entities, no, both the functions are performed by single board. Governance roles can be part of the entity legal structure. For example, in a company, directors themselves are those charged with governance. In case of a partnership firm, partners itself those charged with governance. In partnership firm, partner himself is doing business, part of management. He himself taking decisions also, those charged with governance. He himself accountable if something goes wrong also. So the partner himself might be those charged with governance. The partner himself might be management. In some entities, the people who are running the business, people who are deciding the business, both are different. In some entities, they both are one and same. And in some cases, top management, those charged with governance also manages the entity, whereas in other entity, they might be different. You know, ultimately, governance means what? Authority, accountability, both. Authority, the person must have authority and the person must also have accountability. So in governance is usually collective responsibility, like a board of directors, supervisory board, like audit committee, all that. In small entities, governance may be resting with only one person. In a sole proprietor concern, those charged with governance means proprietor. He himself is manager, he himself is owner. So that's it. So who has to decide top management? Ultimately, sir, who is those charged with governance, sir? You don't worry. Ask the person who appointed you. So the auditor may need to discuss and agree with the engaging party on relevant persons to communicate with as per 260. So the auditor understanding of the entity will help to identify who are the right people. So that is why you need to understand the entity and its environment as per 315 to know who are exactly the governance people, who are governance, who is management, who is governance. Are they same or are they different? What is this organization? All that you need to decide. That's it. So directly they may ask you a question like this: who are those charged with governance? Depending upon governance structure, this itself can be asked as a 4 marks question. Any 4 points in this you need to write, and this 4th point also you should write. That's it. I hope you are clear. 260. Now, you know, what are the matters to be communicated? What auditor has to communicate? First, you should communicate your responsibility. You should also communicate, okay, The auditor first shall communicate what is his responsibility. You should clearly tell the management that, look, management, I am an auditor. I am responsible only to give opinion on the financial statements, performing and expressing opinion. And just because you appointed me, your responsibilities will not change. Your responsibility will remain intact. So the audit does not relieve management or top management of their responsibilities. See, those charged with governance means top management. Very simple. But when you're writing an answer, no, when you're writing in the answer sheet, no, you should always write those charged with governance clearly. So the auditor must communicate his responsibilities related to audit, including forming and expressing of an opinion and statement that audit does not reduce their responsibilities. So that is the first thing. So one of the most important thing auditor has to communicate is audit responsibility. How do we communicate? Terms of engagement, engagement letter. Remember engagement letter, SA 210, contents of engagement letter, objective and scope, management responsibility, auditor responsibility. So auditor responsibilities we are communicating through engagement letter already. Second, planned scope and timing of the audit. You know, the auditor provides an overview of planned scope and timing of the audit, including significant risks identified. There is one question on this. Auditor decided to do surprise check. Without informing anybody, he directly went and started surprise check. Management objected. Is it correct? Yes, they are correct. You didn't even tell the management that you will do surprise check. See, you need not tell them when you will do surprise check. If that is the case, that is not a surprise. But you should tell the fact to the management that you will be doing surprise check. Okay, so you may do surprise check whenever you want, but tell the management that you may be doing surprise check. Give a prior intimation to them that during you know any like next 3 months or 4 months I may be doing a surprise visit. Give them an intimation so that they will make you you know they will make arrangements for all that. You know, planned scope and timing of the audit. Scope and timing of the audit you must communicate. Why you need to communicate scope and timing of the audit? So that they will make arrangement. When you're going, your team member, your articles, so many of you are going, so they need to make certain arrangements. Accountant must be available to you. Some staff must be coordinating you. How do you visit the production center? So management has to plan certain things. So that's why you should communicate scope and timing of the audit. And you should communicate, most important, you should communicate in independence compliance in case of listed companies. Straight away 4 marks question might come. Okay, auditor has to, for listed entities, auditor shall communicate. For listed entities, auditor shall communicate a statement confirming compliance with ethical requirements on independence by the firm, by the team, by the network firms. So when you're auditing listed companies, no, there are so many ethical requirements. What are the ethical requirements when we are doing audit of listed entity? We have a discussion in CA final professional ethics chapter, like fees, how much we should charge, other services can we provide like that or not, network firms, network guidelines, so many rules and regulations were there, which we will discuss in CA final. So the auditor has to communicate to the management, those charged with governance, regarding how they complied with independence requirement. Yes, sir, I am independent. I complied with independent. I need to give a statement of compliance to the management regarding independence. Further, when I am communicating regarding independence compliance to the top management of listed company, I should also communicate the following. What are the relationships and other matters that may impact independence, including total fees that we are charging for audit and non-audit? When I'm communicating to the top management, I should tell them, sir, we the auditors are providing you audit services like this, non-audit services also like this. Fees for audit is this much, fees for non-audit this much. Our network firms are also providing you some services. What are all relationships your firm, your network firm, your partners, what are all relationships that you are having? You must communicate with top management. Fees will be allocated into categories to help top management, governance management, assess the impact on independence. See, sometimes if auditor is depending too much on the client fee, that's a self-interest threat. Yes or no? So you need to clearly communicate them how much fees you are getting for audit services, attestation services, how much you are getting for non-assurance engagement. You should communicate so that they will decide whether are you independent, are there any self-interest threat like that, they will decide. So auditor has to communicate. Further, fine. Definitely when you are communicating about independence related compliances, definitely some threats would have been there. And you might have implemented safeguards on it. Communicate, explain safeguards applied to eliminate the threats or reduce the threats to acceptable level. So what are the safeguards that you implemented so that threats will be controlled, the threats will be eliminated, or threats will be reduced to an acceptable level. So straight question can come many times asked on 260. Communication of independence in case of listed companies is most important when the auditor is communicating to top management. So communication of independence means what? First, a statement. Auditor has to give a compliance statement, a statement that the firm, the partners, the engagement team, the network firms, they all complied with ethical requirements, and details of relationships that the firm, network firms has with the company, and other matters that may impact independence, details of relationships and other matters that also communicate them, including total fees charged for audit and non-audit. Divide the fees must be allocated into assurance and non-assurance so that the top management will decide further what are the safeguards that you implemented to eliminate the threat or to reduce it to acceptable level. That also you should communicate. So this is about communication of independence in case of listed entities. Straight away a 4 marks question might come. Be careful. Next, you should communicate significant findings in the audit. So you will be doing audit, right? So when you're doing the audit, you might have found, you might come across some significant findings. All the significant findings also you must communicate. The auditor must communicate the following significant findings. 1. Significant findings about entities' accounting practices. What is your view, auditor's view, on significant qualitative aspects of accounting practices, including accounting policies, estimates, disclosures? I explain why certain practices may not be most appropriate. So in management, no, their accounting policies, accounting estimates, their accounting practices observe. Okay, and in that, if some practice is not correct, communicate them why it is not correct. So auditor's view on qualitative aspect of entities accounting practices. Generally, first time when you're doing audit, you may not communicate this because you don't have any idea on accounting practices, because you didn't understand the practices, their culture. Over a period of time, when you're doing audit for 3-4 years, you will understand their practices. Next, communicate significant difficulties encountered in audit. Are there any difficulties that you faced in audit? Communicate. For example, management is not giving you data. Communicate them. Management is putting pressure on you. Communicate them. Management is putting limitations on you. Communicate them. These are all significant difficulties in audit, and if top management and management, if those charged with governance and management are different, communicate significant matters discussed with the management. Written representations also you communicate. So you need to communicate generally significant matters, whatever you discussed with the management, whatever significant matters that you discussed with the management. No, what is the discussion take place, with whom you discussed, what they replied, that entire discussion, share it with the top management. Remember, in this entire standard, here we are discussing matters to be communicated to whom? Those charged with governance. All these matters are something that we need to communicate to those charged with governance. And further, circumstances affecting form and content of audit report. If at all you want to include emphasis of matter para, other matter para, or you want to give modified opinion, or you want to use material uncertainty related to going concern, MURGC para, you want to modify the audit report. Why are you modifying the audit report? Whether you are modifying opinion, whether you are including emphasis of para, other matter para, other information para, MURGC para, whatever the reason, you are modifying the audit report. Circumstances affecting the form and content of the audit report. Communicate the management. What are the circumstances and any other matters which, according to the auditor's professional judgment, they require oversight of financial reporting, oversight of top management. That's it. These are the matters which auditor has to communicate. What are the auditor has to communicate? Auditor responsibilities, which he will communicate it through engagement letter, planned scope and timing of the audit, significant findings like entity accounting practices, significant difficulties, significant matters, whatever you discussed with the management, modifications that are there in the audit report, any other significant matter. And in case of listed entity, compliance with independence, that statement you need to give. And you should also discuss with management relationships, all that. You should also discuss with management how much fees you are charging for audit and non-audit. You must also discuss with management. You must also communicate to top management regarding safeguards that you implemented. That's it. And it is Mr. Auditor, you who is responsible for establishing communication process. You should only establish communication process. The auditor must communicate form, timing and general content. So you should tell the management in what format you will communicate, when and all you will communicate, what generally you communicate. Just give them an idea. Sir, as I'm going through the audit for the next 40 days, next 50 days, next 3 months or 4 months, I will be giving you update on a weekly basis. Just tell them that. The auditor shall communicate significant findings in writing. If oral communication is not sufficient, if at all any significant matter is there, you felt that orally it should not be communicated, then you must communicate in writing. And communication need not cover every matter. You don't have to tell, yeah sir, just today morning I came, just now I had a breakfast. No need to communicate each and every issue. Communicate what you feel required. And adequacy, auditor has to evaluate whether two-way communication is adequate, assess what is its impact on the risk, determine its impact on the obtaining sufficient, appropriate, and take adequate action, appropriate action. You must check whether communication between you and the top management is adequate. So, if top management and you, there's a proper communication between you, proper rapport is there between you, they will give you you information on time. They will give you information correctly. So you must establish a very cordial connection with the top management. And if any matters are communicated orally, please document what you communicated, when you communicated, to whom it is communicated, all that you document. Suppose if mistake is if at all any communication is made in writing to top management, just keep a copy of it. Keep a copy of it as a part of documentation. That's it. Now, so two-way communication process. So two-way communication process. An effective two-way communication process is important. Why? It benefits auditor. How it benefits, it benefits the auditor. How it benefits the auditor? He will get a benefit. The auditor relies on top management for information about the entity, including the audit evidence. Yes or no? So you will get a better evidence if at all you are communicating with top management. It will help top management also. Those charged with governance in fulfilling their role in overseeing financial reporting process and reducing the risk. If you communicate with them, if there is a proper communication between the auditor and top management, it is helpful for the top management to identify the mistakes at an earlier stage, so that the financial statements are free from MMS. It will help both of them. The auditor and top management together can develop a constructive working relationship to support audit process while maintaining independence and objectivity. So an effective two-way communication is important for both auditor and top management, as well as the auditor, as well as the top management, those charged with governance. That's it. 260 standard is over. See how easy the standard is. So an effective, so what we actually completed, an effective two-way communication, how it is beneficial for both of them, how it is beneficial for auditor, how it is beneficial for top management, how it is beneficial. Who are top management? Those charged with governance. Who are they? What are the matters to be communicated, especially independence in case of listed companies? That also be discussed. What is the establishing communication process? That also completed. One more standard over. Pakka 5 marks question possibility on 260. Right now, whatever I discussed in the last 15 minutes, mark my word, Pakka 5 marks question, or maybe a 2 marks MCQ will be there. Whoever have watched this 15 minutes, past 30 minutes, right now you are securing close to 10 marks. Mark my word. Tomorrow after the paper, you come back and see this video. Definitely the question which is tested in exam would have been covered in this. Pakka. That's it. Next. SA 265. What is SA 265? In SA 265, we have totally 5 issues to understand. 5 issues mainly to understand. What is 265? Just 1 minute. I hope you're enjoying. You are getting some clarity on this revision. Next, SA 265. What is 265? Communicating deficiencies in internal control to the management and those charged with governance. Communication to management and those charged with governance. Both of them you are communicating. What are you communicating? Deficiencies in internal control. You are communicating deficiencies in internal control. Communicating deficiencies in internal control to top management and management. Like here you are communicating to two people. Like first of all, what are you communicating? Deficiency in internal control. To whom you are communicating? Those charged with governance, and you're also communicating to management. If it is a significant deficiency, you will communicate it to top management. If it is a normal deficiency, the standard calls it as other deficiencies. The standard divides SA 265 divides deficiency into two types. Significant deficiency, other deficiency. Significant deficiency you communicate to those charged with governance. Other deficiency you will communicate simply to management. Remember, sometimes management and those charged with governance will be one and same. That time you will just communicate to management. That itself is treated as communication to top management. If at all management and those charged with governance are one and same, communication to management itself is equal to communication to those charged with governance. That's it. So now, what is a deficiency? What is a deficiency? Deficiency means what? Deficiency and significant deficiency means what? By the way, before I discuss, what are the points that we are going to discuss in this? First, we are going to understand what is deficiency, what is significant deficiency. How do you decide whether a deficiency is a significant deficiency or not? Somebody is asking smart notes. Who I'm following goat notes is also there, which is also effective. Yeah, goat notes is very effective. I'm telling you, both are effective. Goat notes is now much more simpler and easy. Now, how do you decide whether deficiency is a significant deficiency or not? What factors that decide significant deficiency? Will there be any indicators like significant deficiency? How do I find? Will there be any indicator symptoms? Yes, symptoms will be there. And how to communicate them? And management letter, LOW, is nothing but letter of weakness. How do you communicate? You communicate them in writing. How do you communicate them? Through a management letter or through a letter of weakness. Remember, management letter is different. Management representation letter is different. MRL is SA 580 written representation. Management letter means 265 letter of weakness. Fine. Anyhow, one by one, let's discuss. One by one, we will discuss. Deficiency and significant deficiency. A deficiency means what? Control is there, but the control is ineffective. Means the control is existing but not operating effectively. It is not preventing fraud. It is not preventing error. It is not preventing or detecting misstatement. The control is there for namesake, but it's not working effectively. That's a deficiency. Or control is missing. There must be a control to prevent an error, to prevent a fraud, to prevent a misstatement, to prevent some misstatements. No, controls must be there. That control itself is missing. Both are deficiencies. A control is designed, implemented, operated where it fails to prevent, fails to detect, fails to correct a material misstatement. A control that is necessary to prevent misstatement, necessary to detect, necessary to correct, that is also missing. A control which is ineffective, which is failing, or a control which is missing, both constitute deficiency. Be careful. Now, significant deficiency. What is a significant deficiency? First of all, it's a deficiency. It's a deficiency in internal control or a combination of deficiencies in auditor's judgment is most important to merit the attention of top management. If I feel some control weakness is there, some controls are not working, some controls are missing, and I want this information, this point top management must know. That is so important that this deficiency merit top management attention. It merit those charged with governance attention. Then the deficiency is called as a significant deficiency. Very simple. Basically, deficiency. Either ineffective control or control is missing. Absence of control or ineffective control. Both are deficiencies. And if I feel this deficiency knowledge, top management should aware of. They must know this. Such a kind of severity it is. Then the deficiency is called as significant deficiencies. How do you determine significance of a deficiency? What is the likelihood of the recurrence? If control is weak or if the control is missing, what is the possibility of occurrence of misstatements? What is the magnitude? How much mistake might happen? If the mistake is very high amount and possibility is very great, then we classify the deficiency as significant deficiencies. Remember, by the way, significant deficiencies might exist even though the auditor has not identified any mistake. Just because say for example, a bank locker, the cashier does not put lock to the cash box. Just because he didn't put a lock, can I say that pakka cash theft happened? But if cash theft happened, I can say that lock system is weak. Correct? Exactly. Now, how do you decide whether significant deficiency is there? The matters which auditor may consider in determining whether a deficiency or a combination of deficiencies constitute significant, whether deficiencies are they significant or not. How do I decide? First, likelihood of deficiencies leading to misstatement. Whether this deficiency lead to a misstatement, what is the possibility, what is the chances? How much susceptibility to loss or fraud related to an asset and liability, subjectivity and complexity involved in determining accounting estimates, how much amount is exposed to the deficiency, because of this deficiency amount how much is exposed, volume of activity in that account or transactions which is affected because of this deficiency, how much mistake might happen, how much transaction is affected because of this, and what is the importance of controls to the financial. In control, control is ineffective or control is missing. Either the control is ineffective or the control is missing. That is what deficiency, right? What is the importance of that control to financial reporting process, to the financial statements preparation process? What is the impact of this control? Now, especially significance of controls to financial, including monitoring controls, management oversight, fraud prevention controls, controls over selection and application of accounting policies, controls over significant transactions with related parties, controls for transactions outside normal course of business, controls over period and financial reporting process such as non-recurring. These are all various controls. These are all various controls which are significant for financial reporting. They may ask you the 6th point itself for 4 marks question. The auditor has to decide whether a deficiency or a combination of deficiency constitutes significant deficiency or not. Auditor has to decide. While deciding significant deficiency, one of the factors the auditor will consider is importance of control to financial reporting. Give few examples of those controls. What controls are relevant to financial reporting? Example, general monitoring controls that is relevant to financial reporting. Controls over fraud prevention and detection, fraud prevention detection related controls. Controls over accounting policies, controls over significant transactions with related parties, controls over transactions outside normal course of business, controls over period end financial reporting process like non-recurring journal entries related controls. These are all various controls which will impact financial reporting. And what is the importance of these controls? If that control is deficient, I may consider that as significant deficiency. Then frequency of exceptions arising. If this control is not working properly, to what is the frequency of mistakes or exceptions possible? Just 1 minute. Yeah, next. Interaction, how the deficiency interacts with other controls. Don't worry, very simple. I'll simplify this like anything now. You know, what are the factors? One, this you remember, this you read. They may ask you straight away this main question itself for 4 marks question. This main question, deficiency and significant deficiency, straight away, meaning of deficiency, meaning of significant deficiency, they may ask you. Or what are the factors that decide significant deficiency? So, first point, likelihood of deficiencies leading to mistake. Subjectivity and complexity involved, especially in accounting estimates such as fair value accounting estimates. Amount exposed, volume of activity, and 6. That's it. So 1, 3, 4, 5, 6. These 5 points are enough. The importance of control to financial reporting. These 5 points, main points, that's enough. If at all the question is on matters that affect matters that decide whether deficiency is a significant deficiency or not. Now sometimes in exam examiner will go beyond. Importance of control to financial reporting is one of the parameter, right? Importance of controls too. If the control is more important to financial reporting, the deficiency in that control may call it as significant deficiency. What do you mean by significance of controls to financial reporting? Like which controls? Including example, general monitoring controls such as oversight of the management, controls over fraud, controls over application of accounting policy, controls related to related parties, controls per transaction outside normal course of business, controls on period end financial reporting process such as non-recurring journal entries like outstanding entries, prepaid entries, all that. So these are all the various controls which are examples of controls related to financial reporting. So these are all various controls, these are all various examples, various factors which auditor takes into account to determine whether a deficiency is a significant deficiency or not. Next, will there be any indicators? Yes. Mistake is there, fraud is there, that's an indicator that some significant deficiency is there. Ineffective control environment, one of the indicator is ineffective control environment. Our auditor found out a mistake. Misstatements are found. Misstatements found during the auditor's process that were not prevented or detected by internal control. We found a mistake. That itself is a proof that yes, some significant deficiency is there. Material misstatements, prior period material mistakes. Okay, some mistakes were there in the current year statement of P&L which are prior period in nature. Therefore, some deficiency pakka is there. Management inability to oversee, evidence of management inability to oversee. Management is not able to see the financial reporting process correctly, carefully. That itself is an evidence that some deficiency will be there. Yes or no? And finally, ineffective control environment. The control environment is ineffective. Like evidence that control environment is ineffective. For example, management fraud is there. It may be material or not, doesn't matter, but top management fraud is there. That's an evidence that top management control environment is not proper. That's an evidence that significant deficiency is there. Management fails to implement remedial action. Like some, previously we have reported some significant deficiencies. Management does not implement any remedial action for that. Lack of risk assessment process, where it would be practically, generally every company has to do risk assessment on their own. That risk assessment process itself is missing. If that risk assessment process missing means there will be a high possibility that employee will take it granted. Entity's risk assessment is entity is doing risk assessment, but it is ineffective. Ineffective response to significant. Entity do risk assessment, they identified significant risk, but they're not doing any actions on them. They're not taking any actions on the significant risk they identified. And significant transactions involving management interest. Top management directors are having interest in some transactions. Some transactions are conducted with some partnership firms and LLPs where directors are having major interest. So that itself is one more indicator that significant deficiency might be there, fraud might be there, error might be there. So what are indicators of significant deficiency? Ineffective control environment, auditor identified mistakes, prior period mistakes, management inability to oversee financial reporting process. These are all various indicators. Now in exam, no, they might ask you this first point itself as a 4 marks. One of the indicator of significant deficiency is ineffective control environment. Give few examples. Evidence of aspect of control environment is ineffective. In this, any 4 points you write: absence of risk assessment, ineffective risk assessment, management fraud, no remedial actions for the significant deficiencies which they identify. Management fraud is there, deficiencies which were we communicated previously but no action on them. Risk assessment process is not at all there, or it is there but ineffective. These are all various points. 4 points you should write. Straight away a 4 marks question can come on this. Next, now communicating. So see, first to be understood what is a deficiency, what is a significant deficiency. How do you decide whether a deficiency is significant or not? Factors. Then third one, indicators of significant deficiency. Now communicating, to whom you should communicate? Communicate in writing any significant deficiencies in internal control during the audit on a timely basis. Communicate to management on a timely basis. In writing, significant deficiencies, communicated or to be communicated to top management. So tell the management that these are significant deficiencies which we want to communicate to top management. That information also give it to the management. And other deficiencies, but not, which are important for management attention, communicate them also. Getting it? That's it. So the auditor must determine based on the work performed whether deficiencies in internal control existing. If so, auditor must check whether they are significant either individually or in combination. If they are significant, tell the management that you are going to communicate them to top management. If there are other deficiencies, communicate to management directly. Both you must communicate in writing. That's it. Now, contents of written communication. Now you need to communicate them in writing, right? That is called letter of weakness, also called as management letter. It is called as both letter of weakness, also it is called as management letter. So the written communication, so description and potential effect. A description of deficiency and explanation. So you should write, sir, in purchases, GRN control is missing, purchase order control is missing, vendor master is updated directly. So describe the deficiency and how it will impact, how a fraud might come, how an error might come, impact. And specific explanation, the auditor must mention in letter of weakness clearly that the purpose of audit is to express opinion. See, what is your objective? Is your objective to communicate all the deficiencies? No. Your objective is to give opinion on the financial statements. And internal control was considered to design audit procedures but not to express opinion on effective. Tell me, are we responsible to give opinion on internal controls? Is that our duty? No, mention that also. Management, this is a letter of weakness to top management. In this letter, I am listing out some deficiencies which I identified in the audit. But remember, this is not my duty. My duty is to give opinion on the financial statements. But as a part of the audit, I verify internal controls. When I'm verifying internal controls to plan my audit, I came across some deficiencies. So these are the list. And the reported matters are limited to deficiencies identified during the audit. I need to clearly tell them that whatever I am communicating, they are only those which I identified. They are not exhaustive. In the company, so many weaknesses will be there in the control. I don't know all the weaknesses. Whatever I found out, they are limited to what we identified in audit. That fact also you should communicate. So directly, this itself can be asked as a 4 marks question. Contents of written communication. Contents of written. Adarsh, it's a live, ma. Okay, it's a live. Premier, you will find a tag called Premier. It's a live. Okay, fine. So contents of written communication. So description, describe the deficiency. What is the impact? Specific explanation, mention your purpose of audit and mention that you consider internal control, and also what are all the mistakes, what are all deficiencies you are communicating. It is only you identified. Whatever you are communicating is only you identified. Whatever deficiencies you identified, only you are communicating. You are not communicating full length of all deficiencies in internal control. That fact also you should tell them. That's it. So another 15 minutes, we completed this standard also. 265 is also over. I hope you are clear. Yes or no? So deficiencies in internal control may be identified by the auditor during risk assessment process or some other stage of audit. At any stage you may identify. Yes or no? So that's it. 265 standard is also over. Now look at, so we understood what is a deficiency, what is a significant deficiency. We understood how to decide whether a deficiency is significant or not. Indicators of deficiencies, communication of deficiencies we understood. What is management letter, letter of weakness, what are the contents of letter, what is the contents of written communication. So that you should. That's it. 265 standard is over. You see how easy this chapter is. Then SA 260, SA 580. If these two we finish, this particular chapter will be over. Now, SA 560, subsequent event. Generally, many students will confuse. Subsequent event means those events that are subsequent events are those that occur after the balance sheet date, but before the financial statements are approved. That is accounting standard definition. But in auditing standard, the definition is much more bigger. You know, many students don't know. But right now, I don't want to give all the entire backdrop, all that. So I will directly enter into the matter. Just a minute. Yes. You know, directly. So what is subsequent event definition in audit? Events occurring after the date of financial statements. Date of financial statements means nothing but 31st March. Date of financial statements means the end date of the latest period covered. So events occurring after the date of financials, but before auditor's report date. Generally, audit report date and approval of financial statements date will be one and same. Financial statements approval date and audit report date both will be one and same. And most importantly, fact came to the knowledge, fact that became known to the auditor when? After the date of audit report. If at all auditor got to know subsequent event information after the audit report date, what to do? So events occurring after the date of financial statements but before the date of the auditor report, and that fact came to the auditor's knowledge after the date of auditor's report. For example, so 31st March is the date of financial statements. You know, 10th June is the date of auditor report. In between, 15 events happen. You know, 14 events are non-adjusting events, whereas one event is adjusting event. And as a part of auditor, before I give audit report, all the 15 events I verified. I also found out that there are only 15 events. I also found out the only 15. Management also found 15. They rectified. Everything is over. Accounting standard 4 responsibility I fulfilled. But you know, I gave audit report, right? Somewhere on 15th June, I discovered 16th event. There is actually 16 events happened during this period between 31st March and 10th June. 16 events happened. But I only know 15 events. But after I gave the audit report, now on 15th June, I got to know 16th event. I got to know another event, which is adjusting event. Or maybe non-adjusting but require disclosure. Material non-adjusting event I discovered now. Remember, this event happened between 31st March and 10th June only. But I discovered it on 15th June after audit report is prepared. What should I do? This is what SA 560 is talking about. SA 560 is not talking about remaining 15 events which you already identified and rectified. They are talking about that event which you identified after audit report is given. Now, the standard talks about two situations. Just a minute. So the standard talks about two situations. Case number 1, case number 2. 1. You identified after 10th June. 10th June in our example is what? Audit report date. You identified after 10th June. But before financial statements are issued. Financial statements issued means notice date. For example, notice date is 10th August in this company. Let us assume. You identified before, on or before 10th August. Case number 1. Case number 2. You identified after 10th August. What do you mean by after 10th August? Case number 2. Events identified after financials are issued to the public. Case number 1, events identified before the financials are issued to the public. Case number 2, event identified after financials are issued to the public. Like what to do in case number 1, what to do in case number 2. That's what they're asking. In one of the recent exam, in Jan exam, I guess itself, in Jan 25 itself, this case number 1 or case number 2, one of this case has been asked as a descriptive question for 5 marks. Be careful. Now, case number 1, sir, I identified event between this period, sir. Like event happened before audit report date only. Event happened during May month only. But I found out that event after 10th June, but before financials are issued. Very simple. Auditor, what you have to do? What you have to do first? Fact identified before the date financials are issued to the public. If a fact came to the knowledge of auditor after the date of audit report, but before financial statements are issued to the public, first discuss the matter with the management. See, financials need amendment. If so, how management is going to amend it? Ask them. Sir, management is amending, sir. They're very humble. They're amending, sir. If management is amending financials, perform procedures on the amendment, whether they rectified financials correctly or not. Extend the audit procedure to the date of new audit report. Provide new audit report on the amended financials. Like financials are amended, right? Now give a new audit report. Ensure that new audit report is not dated earlier than the approval date. See that the audit report is not dated earlier than the revised date. Now you see, originally financials are approved on 10th June. Your audit report is also on 10th June. Now on 15th June or 16th June, you found out one more event. Now you communicated management. They amended financials. Now the financials are amended on 20th June again. Now you are giving audit report once again on 20th June. So you should, now the revised audit report date is 20th June. Be careful. So perform procedures up to 20th June once again. Whether the amendment is correctly there or not, check out. Ensure that new audit report is not earlier than the approval of the amended financials. So new audit report date you will give with the 20th June. Next, suppose management is not amending the financials. If report is not yet provided, management does not amend. Sorry sir, financials are approved. You also give audit report. Why we will amend? They replied like this. The auditor modify the opinion. You take back audit report. You have not yet given audit report, no? Tore that. Give a modified opinion because you found out a subsequent event because of which adjustment is required in financials, whereas the financials are not amended because management is not interested to amend. You modify, you amend the audit report. If report is already given, sir, I already gave management the report, sir. Notify, tell them. Tell the management and top management, those charged with governance, like don't issue the financials and audit report until amendment is made. If unamended financials audit report is issued to the public directly without your consent they issued, you must take appropriate action. Legal opinion we must take here. So this is case number 1. Sometimes no, you got to know about subsequent event. Remember, subsequent event happened before 10th June only. Here subsequent event happened before 10th June only, but after the financials are issued to the public, you got to know that. Event happened before 10th June. You gave audit report on 10th June. Event is happened before 10th June, but you found out that after 10th August. 10th August is the date of financial statements issued in our example is 10th August. After 10th August, you got to know this. Very simple. First again, discuss the matter with management. See whether financials need amendment. Inquire how management is planning to address this issue. If management is amending, check the following. Perform necessary procedures on the amendment, like they're amending the financials, they're revising the financials. Remember, here already previous version financials and audit report is given to public. Review management steps to ensure recipients of previously issued financials and audit report are informed of the situation. Management, no, they sent a mail. Dear all shareholders, please ignore the previously issued balance sheet P&L audit report. We are sending revised report. Like that they sent a mail. Then happy. Extend audit procedure to the date of new audit report. You know, original audit report date is 10th June. Now the new audit report is 20th August. So up to 20th August, you apply subsequent event procedure and provide a new audit report. And remember, if management is not amending, notify the management, you know, and top management that auditor will seek future. If management does not take any necessary steps, auditor will take appropriate action. That's it. Here, amendment not restricted to subsequent event. This point is not there in India. That is not required. We will discuss in our actual class so full length. This standard we will discuss much more in depth. Just here it's a revision, brief revision. I'm giving you a clarity. That's it. Now, this, you know, case 1 or case 2, any of this can be asked. This E point is case 1. This F point is case number 2. Further, this D, what is the audit procedure for subsequent event? Obviously, the auditor shall perform procedures to get an evidence that all events between financial statement 31st March and audit report date which require adjustment, which require disclosure are identified, adjusted, disclosed. The auditor is generally not required to perform procedures on matters that were already satisfactory. You know, what is subsequent event? First understand what management is doing for identifying subsequent events. Inquire with management and top management about any subsequent events which they identify. Read the minutes of the meetings held after the financial statements date. You know, on this an MCQ has been asked in the recent Jan 25 exam. You know, here they mentioned before. They mentioned before the word. This is actually after. So read the minutes of the meeting after the balance sheet date and inquire whether any matters that were not recorded in the minutes. Read latest interim financials. Review accounting records, budgets and other information after the balance sheet date. Any latest budgets, all that. Latest minutes of the meetings. See whether are there any subsequent events, transactions, events that are happened. Check out. And if auditor identifies any event, yeah, I identify 15 events I identified. See, verify that the events requiring adjustment or events requiring disclosures are appropriately adjusted and disclosed. And the auditor shall obtain written representation confirming that all subsequent events were properly accounted. Get a written representation, get a written declaration from the management that all subsequent events are identified, adjusted correctly. Over. The standard is over. So what is adjusting event and what is non-adjusting event? This itself can be asked as a side question, which is an accounting standard question. I hope you will read this on your own. Okay, that's it. That's it. So with this 560 standard is also our main crux of the standard. I told guys, I told main crux of the standard. So definitions and types of events we understood. Audit procedure for subsequent event, case 1 and case 2, all the 4 issues in 560 we understood. Within 1 hour we completed 4 standards. What are all we completed in completion and review? 450, 260, 265, 560. Now we are left with in this chapter 570, 580. 570 is already covered in audit report topic. It's covered as part of audit report topic. Now 580. Once 580, if it is covered, we will be completing completion and review topic as well. That's it. Just 1 minute. I hope you are getting clarity like never before. I hope you are able to quickly revise what is there in this subject. Yeah, now we'll proceed. So SA 580 written representation. The standard heading is written representation. Now in this standard we are going to discuss about almost some 7 topics. What is written representation? Can it be used as an audit evidence? Written representation types on management responsibilities. Other written representation. There are 2 types of representations. One is representation about management responsibilities and other representations. Okay, and what is the date of the representation and period? Conclusions and reporting, and under few cases reconfirmation of representation is required. So what are the matters on which reconfirmation is obtained through written representation? Under what scenarios reconfirmation we will obtain through written representation? Okay, these are the matters which are important in 580. Technically speaking, this is 90% content of the standard, so don't worry. Now let's look at 580. 580. Just a minute. Yeah, so 580 guys, what is a written representation? First of all, definition. Written representation is a written statement. Representation means statement given by management. What are they giving in that? What are they giving through written representation? What are they mentioning in that? They are giving me information, additional information to support my audit evidence. Written representations or written statements provided by management to confirm specific matters or to support other information which I already obtained. I got some information, I got some evidence. To support this, they are giving additional data or they are confirming me something. They do not include financials, assertions therein and supporting records. Books of accounts and financial statements are also in writing, right? They are not representation. For books of accounts and financials, inside that some content is relating to that, management is giving me additional information. That's written representation. Books of account is not a written representation. Balance sheet P&L is not a written representation. But for balance sheet P&L, some matter is there. In books of accounts, some matters are there. On that, additional data company is giving me, management is giving me in writing. That's a written representation. Now, can written representation be used as an evidence? Of course, it's an important source of evidence. Audit evidence includes all information which auditor is using. Written representations are considered as audit evidence. It is a necessary source of audit evidence. And if management modifies or refuses, if at all management is not ready to give, it's a significant issue, it's a limitation on the auditor. And remember, written representation alone does not provide sufficient appropriate evidence. It is not a sufficient appropriate. Written representation is no doubt an evidence, but they do not provide sufficient appropriate. Sir, why written representation is necessary? Why in writing is necessary? If at all we ask them in writing, it will prompt management to consider the matter more seriously. Since I'm asking in writing, they will take it more seriously. They don't casually reply. In writing, they will reply very carefully. And written representations do not provide sufficient appropriate on their own. Only written representation is not sufficient. You see, subsequent event, just now we saw. We review latest interim financials. We review, budgets and all happen later on. We inquire management about subsequent events which they identify. So many works we do. And finally, we will ask written representation. Written representation is only confirmatory in nature, finally substantive, like it's only supporting in nature. That is never a main audit evidence, but that is also important evidence. Remember. Next, objective of the auditor. The auditor has to obtain written representations, okay, confirming that management and those charged with governance fulfilled their responsibilities. What are the responsibilities of management and those charged with governance? Preparing financial statements, providing information to the auditor. Two responsibilities: one, preparing financials, and providing information to the auditor. Both they need to fulfill. They fulfilled or not? Ask them a representation. Yes sir, we fulfilled, sir. We prepared financials as per applicable framework. We provided the auditor with complete information. Get a representation. And the auditor shall also obtain other representations. Other representations means what? If determined by auditor felt it is necessary. Some cases no auditor want written confirmation from management. There you can obtain, or required by other standards. For example, just now we saw in SA 560 standard is saying the auditor please obtain representation that all subsequent events are identified, adjusted, disclosed properly. So since 560 says, I will get representation. So I will get written representation on fulfillment of responsibilities by management. I will get representation on completeness of information disclosure to the auditor. I will get representation wherever I require. I get a representation when other standards on auditing also requires it. 4 circumstances I will get written representation. And okay, you got representation. What you will do? I will respond to the whatever information they provided. They gave me I asked for some information. They gave me. Now I will respond. I will see that and then accordingly I will respond. Okay sir, thank you, something like that. And if management does not provide, there I will respond with my modified opinion. If management is not giving me requested representation, I will modify. For example, I will directly go to the conclusions and reporting, the last section of the auditing standard 580. Suppose I'm asking a written statement, written declaration I'm asking from the management. They are not providing. Management fails to provide requested written representation. Ask them, first discuss with them, reevaluate the integrity impact, take appropriate action, including disclaimer of opinion. See, if representation they're not giving me evidence. Absence of evidence means I'm unable to form the opinion. So I may give disclaimer of opinion. Written representation they gave, but it is fake. They are giving me completely wrong statements. If auditor has concerns about competence, integrity, or written representations are not consistent with other audit evidence, I have a doubts on management's eligibility, competence. I have a doubts on their integrity. I have doubts on their ethical values. I have doubts on their carefulness. They carelessly give written statements. If I feel written representations are inconsistent with other information, if I feel management is not competent, not with integrity, not with ethical values, then I will perform some processes to resolve the matter. If at all still not resolved, I will once again check, are they honest and competent, and I will check reliability of other representatives. They gave all these some other representations, no, that reliability also I will check, and I will take appropriate action, including disclaimer of opinion. If representation provided by them is not reliable, why are they not reliable? The person who gave this statement is incompetent. The person who gave this statement is unethical. The person who gave this statement is not matching with other information which I have. In all these cases, I will try to resolve the matter. If unresolved, I will try to assess that impact on the overall audit. I will try to assess management's integrity, all that. And they gave so many representations, right? What is their validity? I will once again check, and I finally give a disclaimer of opinion. If requested representation not provided, or provided which is not reliable, unreliable evidence, or non-provision of evidence, in both the cases I may give a qualified opinion, or worst case disclaimer of opinion. Because if representation is not available, representation is not reliable, both leads to absence of evidence. If evidence is not available, I may give modified opinion. Next, so that's about conclusion and reporting. What is the date and period covered by representation? Date of representation, it must be near to audit report date. Written representations must be dated as near as possible to to the date of audit report, as near as practicable to the date of audit report, but not after that. Evidence and all you must obtain before audit report date, yeah. After audit report is given, what is the point of getting representation? So, since written representations are necessary evidence, you cannot express opinion before receiving them. Therefore, auditor has to receive representations before the audit report date. For what period? Representation they'll give. For which period? In audit report, what period I'm giving opinion? You are giving opinion on 1 year, then for that year related information. So, written representation must cover all periods in the audit report. Getting it? Sometimes this question was asked in CA final once for 4 marks or 5 marks question. Sometimes I'm asking representation from CFO. Sir, give me declaration that you gave me complete information. CFO told me, sir, I just joined last month, sir. I am not there full year, sir. How can I give representation because I don't know? He cannot argue that. He is going to sign the financial statements, right? Then he has to give representation. If current management was not present during earlier period, they may claim that they cannot provide representation for that time because they are not available. This fact does not reduce their responsibility. They must provide representations as a whole. Accordingly, the auditor can request representation from the concerned management, whoever is present right now. So that's date and period of representation. Very important. Straight away, a 4 marks question straight away. Conclusions and reporting, a 5 marks question straight away might come. Further, written representations are 2 types broadly: management responsibilities and others. What is other representation? Other essays require the auditor to request. Like other representation means as per some other standard I may require, or if necessary the auditor may request additional representation to support other matters. So written representations are 2 types. Brain day. 1, fulfillment of management responsibility. That's one general representation. 2, representation about other representations when some other standard is requiring or when auditor himself felt necessary. For example, these representations are supplementary representations. These are supplementary representation and do not form part of representation relating to management responsibility. What are the examples of supplementary? They may ask you directly in exam. Write about written representations other than management representation, other than management responsibility. Write about written representations that are dealing with the matters other than management responsibilities. Example, these representations are supplementary representations. For example, auditor may ask representation on application of accounting policies. Auditor may ask representations regarding assets and liabilities and valuation. Auditor can ask representation on title deeds, liens, encumbrances. Auditor may ask representation regarding compliance with laws, regulations. Auditor may ask representation on subsequent events. Auditor may ask representation on going concern matter. Auditor may ask representation on related party transactions. Any of these are all supplementary representations. That's it. Next, reconfirmation of responsibilities through written representation. Actually, responsibilities management will accept through letter of engagement. Through letter of engagement, management will accept responsibilities. But there are some cases where through a written representation, we will once again get their reconfirmation. Sir, please give me once again, you are accepting all the responsibilities. Sir, I already gave in engagement letter, then that is okay. Suppose those who signed engagement letter no longer hold the relevant responsibility. The person who signed engagement letter and now who is responsible for financial reporting, both are different. Get from the latest person once again that, sir, you are accepting your responsibilities. Give me once again. The terms of engagement were prepared in last year or that before year I prepared letter of engagement. This year I didn't prepare. So I can once again ask from the current management, please once again give me a confirmation that you still remember your responsibilities. There is an indication that management misunderstood their responsibility. I somewhere felt when I'm doing audit, they misunderstood the responsibility. So once again, through written representation, I will ask them to confirm their responsibilities, and circumstances of change making reconfirmation necessary. Straight away, they may ask you very important question, 4 marks or 5 marks question. So the auditor may ask management to reconfirm responsibilities through written representation. See, actually, management will acknowledge, management will confirm its responsibilities through engagement letter. But there are some cases where they will once again reconfirm their responsibilities, that too through written representation. See, management responsibilities, they always confirm through engagement letter. But here, they are reconfirming through representation. One, when those who signed the letter of engagement is no longer responsible, no longer existing. The terms of engagement are prepared in the previous years, or there is an indication that management misunderstands its responsibilities, or circumstances have been changed, making reconfirmation necessary. Finally, the one part, Written representation about management responsibilities. Management must represent that it has fulfilled its responsibility for preparing financials in accordance with framework. Management has to give a specific representation that yes, they prepared financial statements as per applicable framework. You know, and the auditor may request management to include representation to provide, you know, accurate representation. Management may seek input from others. See, when they are giving representations on management responsibilities, you know, sometimes they may take help of others, actuaries, engineers, all that. So that's it. Sometimes no, management may use qualifying language like to the best of knowledge and belief. You can accept this if at all the person who is giving representation is a knowledgeable person. A knowledgeable person only can use the word to the best of my knowledge and belief. Others cannot use it. That's it. And management shall also provide representation about completeness of information provided to the auditor. Management must give a statement that it has provided the auditor with all information and access as agreed in the terms of engagement. Management must represent that all transactions were recorded and reflected in the financials. So management has to give a representation that they prepared financial statements as per applicable framework. Management has to give a representation that they provided information completed to the auditor. Management has to give a representation that all transactions were recorded correctly, and management also shall give other representation supplementary in nature wherever auditor has requested. Next, that's it. With this 580 standard main theme is completed. From whom you get the representation? The auditor shall request representation from management who have appropriate responsibilities for financial statements and having knowledge of that matter. Written representation related to fulfillment of management responsibilities, all that, you know, from whom, where auditor believes they have knowledge of the matter, who are responsible for financials. Generally from them only we will get the written representation. That's it. With this, entire 580 standard is over. Actually, there is so much of in-depth discussion on the standard and all, but since it's a revision class, I need to save your time. So the crux of the standard I told you, I assume that you already know the subject. Okay, that's the reason I'm not talking many logics here. I'm only revising you in a simplest way so that you understand. That's it. Okay, with this, the chapter completion and review is completed. All the 5 standards I completed within 75 minutes, 1 hour 15 minutes we completed. That too, we discussed each and every concept. We didn't skip any concept. 90% of the concepts we covered. I hope you're happy with the revision, and I'll be very happy if you share your feedback on, you know, through comments, all that. That's it. All the very best. We'll come with another revision, okay, for another topic, audit evidence topic. That's it.